All right, welcome everybody. Thank y'all for coming this afternoon. We're glad you're here. Y'all are joining right now JRBT's first tax talk. This is the first in a series of informational talks that's going to take various formats online. Sometimes it'll be a webinar, sometimes it might be a Facebook Live, so that we can share information with our clients. So Connie's here. Can you hear me, Connie?
I can.
All right, and I can hear you. Good. We're doing this right then. So we had over 250 participants sign up for this, and it looks like most of those people are here listening to us right now. So Connie, I'm pretty sure we've had that big of a response because everybody wants to hear you and me talk, right?
Michael, I really think it's because of the topic, not because of us.
Okay, well, just humor me. So first of all, I'm going to cover some logistics. Connie and I are going to have a discussion about the PPP program, the Paycheck Protection Program, and the funding and forgiveness aspects. And then we're going to get to questions that were submitted in advance by clients, as well as questions that y'all can put in the Q&A section. So you can, there's a Q&A button on the console that you are able to click on. It'll open a window and you can type in questions, and we'll get to those towards the end. We will do our best to get to as many questions as we can during the webinar, but based on the number of attendees, there's no way we can get to everybody's question. So if you have a question that is not answered here, please contact your JRBT tax advisor, and they will help you with your questions. So the webinar right now is being recorded, and it will be available after the fact through the JRBT website and through Facebook. So now comes time for the exciting obligatory disclaimer. This session is for informational purposes only. It doesn't take the place of specific tax advice from your JRBT tax advisor relating to your specific circumstances. Also, I want to point out that every single day, new guidance is being issued about the different aspects of this program. So everything we say here is based on our understanding as of today. And our interpretation as of today, April 30th. And any of it is subject to being clarified, confirmed, or interpreted differently by the SBA and Treasury with additional guidance that they are posting daily. So now that we have that out of the way, I'm going to introduce myself. My name is Michael Brown. I'm a shareholder here at JRBT. My practice area is tax and business valuation, forensic and litigation services. In the tax practice, my focus is owner-operated businesses of all sizes, as well as individuals. So with me today is Connie Berry. Connie, tell us about yourself.
My name is Connie Berry. I'm a tax shareholder at JRBT. I've been practicing for 24 years. My main areas of practice include corporate, international, state and local income tax, as well as high net worth individuals, trusts and estates. I like to say that my favorite part of practice really relates to building client relationships and tax planning.
Great. So I'm going to start off with a quick timeline that kind of catches us up to where we are today in the payroll protection program. So the CARES Act was signed on March 27th, and that established $349 billion of funding into the PPP. On April 3rd, the first applications, corporate and partnership applications, were accepted by the SBA. On April 10th, the first sole proprietor applications for PPP were accepted by the SBA. And on April 16th, after guaranteeing or approving 1.6 million loans, the PPP ran out of money. So on April 24th, the PPP and Healthcare Enhancement Act was signed, and that gave an additional $310 billion of funding into the program. So after that, applications opened up again on April the 27th. So the program is currently open. If you need a PPP loan and you have not applied yet, please contact your banker. Most of the local banks are doing a fantastic job of helping out clients and getting funding out in a swift manner. So that catches us up to today. So now Connie and I are going to talk about some aspects of the program, and then we'll get to some questions. So Connie, we know that the funding formula and the forgiveness formula for the PPP are different. Can you talk us through the funding formula briefly?
Absolutely. With regards to PPP funding, we really started with what are 2.5 times your average monthly payroll costs, which include your salaries and wages, health and retirement plan benefits, state unemployment tax that's paid. And so remember, with regards to salaries and wages, we were able to take into account anything up to $100,000 annually per employee. That figure does not include health and retirement plan benefits. So when you're looking at your 100,000, you're just looking at your straight salary, not benefits.
So the salary is capped, but the benefits portion is not limited on the funding side.
That's correct.
Okay, great. So now the forgiveness formula, that's different, right?
That's correct.
So what is that based on?
So really, we're looking at what our qualifying expenditures are. And so our qualifying expenditures really include our salaries and wages, just like we've included in the funding portion of the application process. So your salaries and wages, health and insurance benefits, as well as any rents, utilities, and mortgage interest. And so when we're looking at our utilities, rents, mortgage interest, we're looking at expenses that were in place or we had contracts in place on services for prior to February 15th.
Okay. So what are the steps of the forgiveness?
Absolutely. The first step really includes tracking your eligible expenses or eligible costs. So when we're looking at that, we want to see how do we really track those. There's a number of different ways, but when we think about it, we have a number of clients that are a little bit loose in their record keeping. And so we want to make sure that all of our clients are doing a good job of keeping those together, because the last thing you want to do is not have the substantiation for forgiveness. So what we're suggesting is that you really look at creating a spreadsheet to track your costs. I believe your banker is going to be thankful that you did at the end of the day. And with regards to those costs, make sure you have the proper substantiation, whether it be a utility bill, a lease agreement to support the lease payments that you made, your mortgage interest your mortgage statements, which break down your principal and interest. Because remember, for your mortgage, you're not able to include your full payment. You're really only including the interest on that mortgage. And then from a payroll perspective, make sure you're including a copy of your payroll register for the payrolls that were paid or incurred during that period.
So Connie, a lot of banks that I'm hearing from clients and from bankers, they're requiring a separate account be maintained to warehouse the PPP funds. Some are requiring it, some are not. Do we think that's a best practice to do that? Does that make it more simple to track?
I think it's definitely, something that you could do in order to track those expenses. Obviously, if the bank's requiring it, then you need to have it set up.
Do what your banker says.
Yes, but how you handle those expenses, whether or not you pay them directly from that account, or do you, just pay over from that account to your regular bank account the exact amount that was paid for your utility bill. So I don't think you actually have to, switch your direct deposits or direct debits to that account for your utility bills during this short period of time, but make sure that you're transferring like amounts over to your operating account to cover those costs so it's easily traceable.
So if my utility bill is $1,737.26, I should make a transfer of $1,737.26, right? Not
Absolutely.
$2,000 just to cover it.
Correct.
I think the big picture is, the separate account is not something that's required by the statute, but it's a best practice that's being put in place by a lot of the bankers to make it easy to trace. And the whole concept is, let's make it easy for the forgiveness, and let's make it simply, easily trackable, easily traceable. The shortest distance between 2 points is a straight line. So let's try and keep it all simple as much as possible. Your banker will thank you when it comes to the time for forgiveness. So what else do we have under step 1 of the forgiveness?
I think the main thing that we need to remember is that the forgiveness period, based on the law as it sits now, is as a funding date. So your 8-week clock starts the day you receive the loan proceeds.
Right. So some people are asking, when does it start? But in the statute, it says date of funding, correct?
Correct.
Now, the Treasury and SBA have some leeway to make interpretations of this law, and it's possible that they come up with something different, but we don't have any guidance at this point, correct?
That's right. We don't have guidance currently for the one question that nearly everybody is asking. What does it mean by paid and what does it mean by incurred? We're still waiting on guidance for that, and as soon as we have it, we're going to get it out to everybody that was on this presentation as well as our clients as quickly as possible.
Right. So the statute says expenses paid and incurred during the 8-week period, but those aren't really terms that are easily definable or that we regularly use with respect to, is it cash or is it accrual, or is it some combination of both? I mean, those are the terms we use in accounting, is cash and accrual. So it's a little nebulous. We're waiting for interpretation and guidance from the SBA and the Treasury. The AICPA has issued what they suggest that Treasury, issue as guidance as to how to do that. But right now, we don't have anything authoritative about what exactly that means. So on some of these things, we're going to have to say, I don't know, because we don't have any guidance yet. And that's one of those things.
Yes.
Connie, do we have anything else under step 1?
I don't believe so. I think really tracking your eligible costs and make sure it's clear as to what those costs are.
Okay, so step 2.
Step 2, we're going to calculate what our payroll costs really are. So we've defined what payroll costs include, but let's kind of walk back through what that is. So we're looking at our salaries and wages. We're looking at sick time. We're looking at vacation time. We're even looking at commissions that may have been payable to an individual who's a worker, not an independent contractor, but a worker, somebody classified as an employee. We're looking at our health insurance benefits, our retirement plan benefits, as well as the state unemployment tax that was paid.
Right. So one of the questions I've heard asked is bonus and commission, is that allowable? So the answer to that is yes, right?
The answer to that is yes. And so I was actually on the phone with a banker yesterday talking about this very issue, because what is allowable? And we've had this conversation many times around our office over the past 3 weeks. So we've really talked about, how do we define what bonuses should be included, should not be included? And so, basically, if we're looking at, would you have paid bonuses on an annual basis to begin with? Because when we're looking back at how we funded the PPP, those salaries and wages included bonuses.
Included the whole year's worth of compensation, right?
Exactly. And so really, do we look at an 8/52nd of bonuses that have been paid in the past? I think that would be reasonable. Do we include, a partial payment based on what we would normally pay out at year end? Could be reasonable. But right now, as we've said before, there's not clear-cut guidance on whether or not bonuses will be allowed, not be allowed. But based on taking into account salaries and wages, I think we can assume that bonuses should be allowable.
So the caveat with that is that there's a certain cap to how much you can pay, correct?
Correct. So let's take into account somebody who annually makes $100,000. During this 8-week period, they're only going to be allowed to receive compensation in the amount of $15,385.
Total over the 8-week period.
Correct, for the 8-week period.
That would include base comp, commission, bonuses, all together. Now, that's for the purposes of forgiveness, correct?
That's correct.
So,
and
so that doesn't mean you have to cut people's pay to that amount. They can still receive compensation in excess of $15,385 over the 8-week period. That just is a reduction, is not included in the forgivable amount, correct?
That's correct. And so you may have some other operating funds that obviously you cover their pay over that $15,385 with, but from the PPP loan itself, you're allowed to pay them $15,385 and count that in your forgiveness computation.
Okay. Plus their benefits on top of that.
Correct.
Correct. Okay. So we're in step 2, I think. What else do we have in step 2?
Really in step 2, that's the main computation, making sure you have all your payroll costs there. The one item that I do want to address, because we've had a number of questions on this, what about payroll costs? So do you get to include employer payroll costs in there? And based on statute, the answer is no. And so obviously your beginning point is gross salaries and wages. So that includes the employee portion. But when you're looking at the employer portion of payroll costs, that is not includable in this calculation.
So employer, FICA, and Medicare are not included in forgivable expenses.
Correct.
Okay. But the employee half of FICA and Medicare and their federal withholding are included.
Correct. And I think the one thing that we want to say is TWC would likely not be included in that, because that's an employer expense.
Okay. Okay. So moving on to step 3, what do we have there?
So for step 3, we have percent decrease in FTEs, which is full-time equivalents. This is important because they're basing it on not only the 8-week period at hand that you're calculating the full-time equivalents on, but you're also looking at the period February 15th, 2019 through June 30th, 2019, as well as January 1st, 2020 through February 29th, 2020. And so you're comparing the full-time equivalents this 8-week period to the full-time equivalents of those 2 separate periods. And obviously, if you deviate from the February 15th, 2019 through June 30th, 2019, or the January 1st, 2020 to February 29th, 2020, and the answer is less than 1, then we have a reduction in the overall payroll costs based on that percent decrease in FTEs.
So the gist is, if your head count goes down, then there's going to be a reduction in the benefit if it is not restored, correct?
That's correct. And of course, the code did give the restorative provision where by June 30th, if you've increased your FTEs as well as cured your payroll provision, then you would be able to, receive full forgiveness. But that's step 5, and we'll
Getting ahead of myself. So then our next step is what?
Reduction in payroll costs.
Okay.
And
Tell me about that.
So with regards to payroll costs, we have to reduce the forgivable amount by the percent decrease that exceeds 25%. So if you no longer have paid 75% of your payroll costs, or if you've, I'm sorry, I'm getting tongue-tied here.
Let's go.
So if your payroll costs are reduced by more than 25%, then you have to— For any
individual employee, correct?
For any individual employee.
Right.
Then you have to reduce your overall forgiveness by that amount.
Okay, so basically the gist of that one is not a reduction in headcount like the prior one is, but it's a reduction in the amount you pay.
Correct.
And this
because
one we don't have, oh, go ahead, sorry.
Oh, sorry. Because the whole point of the PPP was to maintain your current employees' full employment.
Right, right. And this one in the statute, it's pretty unclear as to how this is calculated. There's even a bit of a discrepancy in the time periods and how it's in how you would mathematically compute it. So this is one of those where we're going to have to get guidance on it from Treasury and SBA, because right now it's very wide open as to what that even means. Is that correct?
That's correct.
Okay. And even also on the FTE calculation, we don't know exactly how we're expected to calculate FTEs, because in different parts of the Internal Revenue Code, there's different ways to calculate FTEs. The most recent one is the ACA, the Affordable Care Act. It calculates it in a different way than what it had been previously.
That's correct. And so we really do need to wait for guidance. Otherwise, we're going to be comparing apples and oranges when we're looking at it across different clients. And so we really need to see whether or not we're comparing it or calculating it based on hours, or are we calculating it based on your wage? And so it'll be interesting to see where the SBA lands on this.
And at this point, we just don't know.
Item.
So
Exactly.
the last step is the restoration. Tell me about that.
Correct. So, we were talking about an adjustment based on FTEs. And so if your full-time equivalent falls during that 8-week period, then of course you have to reduce your overall calculation. But we have the restorative measure within the code to, go back and rehire those individuals by June 30th. And so the one question we've had is really, do I have to rehire the same individual? And FTEs isn't based on an individual by individual basis, but it's based on your workforce or headcount collectively. And so presumably that answer would be no, that as long as you're hiring somebody in their place, that you would be able to restore your FTE and therefore, receive forgiveness based on additional hirings.
Great. So I think that covers the 5 steps of forgiveness in a non-theological sense. So what are there? Well, one of the questions I've heard clients say a lot, and something I think that is very misunderstood, is the 75%, 25%. Can you tell us about the 25% cap on non-payroll costs?
Absolutely. So when we're looking at our expenses, it's pretty easy. If you pay, all of your PPP loan out as salaries and wages, obviously you should should meet the forgiveness, provided FTE stay where they need to be, etc. And
the 100,000 limit, right?
Exactly. But if you have expenses in there, such as rents, utilities, mortgage interest that you're paying down, and those are 30% of your calculation, obviously you're going to be reduced on the amount of forgiveness that you have. And so it's really important that we, go back to step 1 with tracking to track whether or not we've paid enough in from a salaries and wages standpoint.
Right.
And obviously that can be a little bit hard as well, because you're trying to make sure that you maintain, this portion of the forgiveness. But remember, you have other provisions of the tax code that you're trying to, comply with as well. And so you may have some crossover there, some unintended consequences. So you have to make sure that you're really paying attention to what you're doing and not, ending up in a situation where you're causing more taxation or not getting the full amount of the loan forgiven. So make sure you're consulting when you're handling these items.
Right. Okay. Just another question is, let's say I'm a client, but I'm keeping my own books. How would you record this on your books?
That's a great question that we've heard quite a bit recently as the funding has rolled in. So basically, we're going to, record a note payable for the loan proceeds that are received. And as those, after those items have been spent down and we've debited our expenses, I would suggest that once we've calculated what our forgiveness is, to go back and make a journal entry to pull out of the note the forgiveness. And so at that point in time, we would, have a journal entry to debit the note payable and credit an other income item that's non-taxable loan proceeds.
Right. So you would want to clearly make sure that your forgiveness entry reduces the note, but then doesn't put your revenue, your income side in normal revenue. You want it to be clearly differentiated from all the rest of your revenue, so that because of the fact that it's non-taxable, and you don't want it to get inadvertently included in your taxable income. So make sure it's in other income, and there's a good description on it that says this is PPP loan forgiveness.
Correct.
So that when we're doing your taxes, we can easily identify that amount separately. Cool. So I'm just going to hit any other, just kind of go through different questions that we're getting. One question is it okay to increase compensation on a temporary basis to help make up for some of the lost wages? And can we pay bonuses to staff? We kind of covered that, but
Right.
What do you think about that?
I really think that you should be able to increase your bonus or pay a small bonus. I have a client who, based on their workforce, have a number of people who may not have been incentivized to come in during this time because of other, financial avenues out there, i.e. unemployment compensation. And so they really have incentivized their clients to show up every day by, adjusting who receives, project bonuses. And so they're no longer limiting those necessarily to their management team members, but also paying it out to some of their staff as well.
So it'd be okay to make some adjustments in compensation as long as you're still within the $15,385 for any individual over that pro rata 100,000 over the 8-week period. Okay.
Correct.
Also, can PPP funds be used towards paid time off or other vacation time?
Yes, they absolutely can.
Good. Here's one that's interesting. So our utilities auto pay on a credit card. We pay that off monthly. How does the timing fall in? I mean, and I'll say this, we don't exactly know with specific guidance, but what's your thoughts based on how we account for credit card payments on a cash basis with other taxpayers?
Right. So when you make a payment on a credit card under the cash basis of accounting, obviously the payment is treated as though, the charge was treated as though it was made at the time that you made.
The time it debits the account, right?
Exactly. Yeah. Thank you.
Okay. So basically, our interpretation as of what we know today is it would be based on the day it charges the credit card.
That's correct.
So the day you pay off the credit card.
Yes.
Because that's how it's accounted for on the cash basis of accounting for taxpayers. Okay, let's see. We covered the bonus. Let's see what other questions we have here. Well, we have a lot of questions. Let's see what we should ask. A lot of these we've covered. Okay, so here's one. What if one person receives wages from 2 different entities?
That's a great question. We have a number of small businesses that have received PPP loans that weren't required to aggregate based on rules. And so they may have been receiving compensation out of one entity and compensation out of another. And so based on where you're receiving compensation and how the loans were funded, both of those entities should be able to pay wages to you. And whether or not you exceed the $100,000 mark will be dependent based on the entity you're participating in, but not in aggregate as we know of it at this time.
Because basically the affiliation rules have been waived, right? It's
Correct.
For those purposes.
Correct.
Right. Okay. I think we covered and pointed out. Oh, go ahead. Sorry.
Oh, I think the one question that we've been seeing quite a bit relates to utilities. And so utilities has been described, and I can't remember exactly where. Michael, do you remember where it was described?
Utilities was described in the statute, and it includes, oh gosh, no.
It includes telephone, internet, electric.
Does include, right, telephone, internet, electric, gas, and I don't have it in front of me. But I think the big question for a lot of people was, is cell phone included? Correct. And as long as you define a cell phone as telephone, then yes, that's how I would interpret that.
Exactly. As long as, once again, as long as the contract was in place by February 15th.
So that does raise a good question. So when we're looking for information on the act, what's the best place to go?
The best place to go for us, the best place has been the Treasury, because we're looking specifically at what the code has stated. And so that's where we would go as practitioners. With regards to those who are not practitioners, whether it be lawyers, accountants, what I would suggest is, Googling AICPA. They've had some great guidance out there, not only for practitioners, but they put out great articles on the subject matter at hand.
And even y'all listening right now, go to treasury.gov. It has the most comprehensive, and you're getting up-to-date information, because they have a running list of FAQs, and they're adding new FAQ answers to that running list almost every single day. And so, like, we went and looked at it, this morning before we got live, to make sure we had the latest information. And they're issuing interim final rules, IFRs, on a regular basis. Right now, the last few of them relate specifically to the banking aspect of this, but we do expect additional guidance to come out from Treasury in the form of IFRs and additional FAQs. So if you want to know what the latest information is, go there. Anything else I would consider out of date.
Well, not only out of date, but subject to interpretation as well. Right.
Agreed. So here's a question, and I'm going to preface by saying I think the answer is we don't know. It says that guaranteed payments are allowed for active general partners. What about a guaranteed payment for a limited partner?
That's a great question.
One which does not have an answer yet.
No answer. We're still waiting on guidance.
Okay, great. We'll have some unsatisfying answers to some of this, just because we don't know. People are asking about the calculation of FTEs. We already said we don't know yet the answer. Let's see.
Why don't we jump back to mortgage, as it's defined? Because I think a lot of people, when you hear mortgage interest, you're really thinking about it from the standpoint of mortgage on real property. But what does the term mortgage interest really mean? And how is it defined by the code? I think that.
So we actually looked at this yesterday, and we're a little surprised by the answer. So a mortgage loan is considered a loan that is secured by real or personal property. So in theory, but the caveat is the loan has to have existed at February 15th. So if you had a loan that was secured by personal property, that interest is includable in the non-payroll portion of allowable funds, correct?
Correct. So if you have, a note on a truck that you use in your business, then that is considered mortgage interest under the statute. And so the interest on that note would be deductible.
Right. One question I'm seeing over and over again is, let's say my PPP funded on last Monday, and my payroll ran on Tuesday. So, it goes into the paid and incurred question. Should you include the payroll that was really earned but paid later? Or, one way or another, you're going to have one fall off, right?
Correct.
So shouldn't you just be consistent in the way you're doing it?
That's exactly right. Currently, be consistent. We're not at that final 8-week period, even for those loans that funded immediately. We're just now hitting the 1-month period. Let's see what Treasury and the SBA come out with as far as guidance to see if they get this resolved in a timely manner, because it's one of those questions that the AICPA is pushing for resolution on. And quite frankly, we need addressed immediately.
Yeah, and I see another question that is, that the payroll was the same day as the funding. Well, I think your 8 weeks period starts when it is the day it is funded. But again, we still need guidance to know which one to go with. But you're still going to get a full 8 weeks either way. So as long as you're consistent in the way you treat it, you're going to get 8 weeks worth of payroll in it.
That's correct. Now, the one question I've had quite a bit lately really deals with self-employed individuals. Obviously, a lot of our smaller self-employed individuals do not have salaries and wages that they're paying to an employee. It's just them in their practice. And so they are wondering, how is their forgiveness going to be calculated? Do you mind speaking to that, Michael?
How, for whom? For self-employed individuals?
Self-employed individuals who have no employees and,
Gotcha.
and possibly have no rents, utilities.
Right. So if you're a self-employed individual with no employees, your funding was based on your net earnings from self-employment. And your forgiveness is also going to be based on the net earnings from self-employment. So you would have given a copy of your 2019 Schedule C, and that's how the calculation was made for your loan funding. And then for the forgiveness portion, that same net earnings from self-employment is what's going to be used in order to calculate the forgiveness. That begs the question, well, do you actually have to pay yourself something out? I think the answer is we don't know, but I think it would be best to go ahead, and pay yourself the portion, 8 weeks worth of self-employment net income, net taxable income off that Schedule C over the 8-week period.
I agree. I think that's imperative. While they've stated that that's how it was funded, I think there still needs to be those payments or distributions out during this time period.
Right. So here's another question from a client. Can retirement plan contributions count as qualifying expenses?
Absolutely. They're included in the definition of salaries and wages. And so I believe those contributions should be one of the qualifying expenses. Now, I think we're probably waiting on some guidance because, as we all know, this is the time period that everybody's funding those prior year contributions for their employees' accounts for 2019. And so does that get included in the qualifying expenses? That's questionable. I think it does at this point in time because of when it would have been paid. But I could see there being further guidance on this because those amounts were included in the funding on the 2019, that the 2019 return supported.
Right. Okay. I see another question about bankruptcy and if it's a disqualification. And if you read through the FAQs on the Treasury, bankruptcy is a disqualification. So that makes it not permissible to get a PPP loan. One's asking about company car benefits, if that's included under 15385. Do we know the answer to that?
I would say company car benefits would be part of your salaries and wage package. And so it should be includable.
Okay. Let's see, let's go through some more. A Lots of payroll questions. And that's a lot of that is to be determined with further guidance, hopefully. Somebody asked about, you know, the loan funding was 2.5 months, and now we're talking about 8 weeks as the basis of forgiveness. Can you just clarify that again real quick?
Absolutely. I think what everybody's starting to figure out is you may have, you know, a little bit that may not qualify for forgiveness. And so depending on, you know, do you have other expenses that qualify? So let's just take an example quickly, Michael. So if we had somebody who was making 100,000 and they, you know, for the funding, they would have received a little over $20,000 based on the 2.5 times their average annual payroll cost, correct?
Right.
And so when you look at the 8-week period, you're looking at only spending down $15,385. So there's a gap there, and you don't quite meet the 75%.
Right. So you're counting 10 weeks versus 8 weeks for forgiveness, but
correct.
You can also include that rent, utilities, and mortgage interest that can make up to 25% of your forgiveness portion.
Correct.
Great. Okay, so I know we didn't get to all the questions, but we're at about almost to 45 minutes, and I think we're gonna wrap up here. We do appreciate y'all joining us today. We hope this was informative for y'all. If we didn't answer your specific question, please email or call your JRBT tax advisor. You know, this act does affect tax, payroll, and retirement plans. So feel free to reach out to all of our experts in those areas as well. Connie, thanks for your expertise. Any final word?
Well, for anybody who did ask a question, we will respond to you individually. We don't want to feel like you didn't get your question answered. And that was the whole point of this, is to help everyone out. So either Michael or I or one of our fellow management team members will be responding to your question. And so if you have further questions, you know, please call us. We're available. And we really appreciate everybody jumping on. We're going to have some future tax talks. They may not be 45 minutes, but we're hoping this week, as we receive further guidance, just to jump on Facebook and give live updates for, you know, new legislation that comes out or clarifications to legislation. So watch for those items.
Great. So y'all remember that the recording of this session will be available on JRBT's website and also on the Facebook page. And y'all be on the lookout for notifications about our next tax talk. Everybody, please stay safe and healthy. Goodbye.
Thank you.